I'm Chris King with OTC Markets, and today I'm delighted to be joined by Richard Carleton, CEO of the CSE. Welcome, Richard.
Thank you, Chris.
It's been a while since we've done one of these videos, so perhaps we could start by talking a little bit about accomplishments at the CSE recently.
Well, the 2018 year was spectacular for the Canadian Securities Exchange. We listed 123 new companies, and CSE companies raised a record $5 billion through the facilities of the exchange, largely in the cannabis space and increasingly from multi-state operators in the US, but also a fair amount of mining activity for the first time in some years.
Terrific, well, congratulations. The CSE and the OTC announced a strategic alliance back in 2017. Perhaps you could just talk a little bit about the benefits for the CSE, specifically around trading volume and liquidity.
Well, I guess there's a couple of ways of looking at it. We work with the OTC markets to assist our issuers in opening up investment opportunities in the United States, as well as capital raising efforts. But we do find that companies that are successful in building a shareholder base in the US, that build liquidity on the OTC markets, that actually enhances the liquidity picture in Canada as well. Whether it's the US market makers trading in Canada, arbitrage between Canada and the United States, and other people just seeing that the stock is more liquid, and as a result it's something that they're prepared to trade. We see an overall positive liquidity effect by being quoted and traded in the United States as well as listed in Canada.
Fantastic. For companies from all over the world that are looking at North America as an option to go public and raise money, can you talk a little bit about why the CSE is such a fantastic option for them, and then cross-trading back into the US?
Yeah, well, really, we offer North America on a single platform effectively. And we think this is a very powerful tool for companies that are looking to come to North America, whether it's to build their business or to raise investment capital to grow the business. Because going to the big US exchanges, we know the stats, right? You've got to be $1.5 billion, $2 billion in enterprise value before all of the expenses associated with being a US public company start to make sense. A much lighter touch, being a reporting issuer in Canada, significantly lower costs. Sarbox compliance is not a thing. D&O insurance is considerably less expensive. Audit fees are lower. And as I say, it gives you an opportunity to not only be a reporting issuer, build that disclosure history and that awareness, but you can also raise prospectus exempt capital in the United States using a variety of exemptions from US law. So it gives you the best of both worlds.
Yeah, complete solution, and it works.
Indeed.
Fantastic. So lastly, would you mind speaking a little bit about, you had a tremendous 2018. How do you see 2019 going, and what accomplishments do you expect to achieve?
We've had a bit of a pause in the action in the cannabis space, which has been picked up by the mining industry and technology industry of all things. We're continuing at a record pace of new listed companies coming into the market. Capital raise is a little off from the pace that we set last year, but we expect a new cohort of issuers to approach shortly. Big US companies with significant enterprise value that will be going public on the CSE.
Okay, well that's exciting stuff, and I think you mentioned in an earlier presentation that you expect to hit a landmark number of listings this year?
We should hit 500 before the middle of the year, and that's something that we'll be celebrating with the entire community.
As will we. All right, well thank you very much. Good to see you again,
Thanks,
Richard. All right.